Hey guys, um, we are almost late, but I think we got a couple of minutes left before the New York opens. So, yeah, man, I felt like recording this session. It's just gonna be a short session, or should I say, a short record, because I don't want to take too long. Right, so and my network is kind of bad, man. It's kind of bad, but we gotta eat. And I also have like a $80 that 80 US dollars that I wanna try to flip. Damn, what's wrong with this network, man? Let me. We are almost at New York opening, or should I say, approaching it. Already have my setup here. So yesterday I'm looking for a drop after a confirmation, of course. But let me remove everything so that I can show you. We are almost halfway. Most with like 1 minute to close. So if I go daily, like you see here, we have a big rejection candlestick, right? But that big rejection candlestick didn't close below this blue one, or should I say inside. It just closed outside, right? This candlestick. So as much as they wanna sell, they are still weak because we didn't see candlestick closing below, right? When there's no a candlestick closing below, that means that these guys can even continue taking out the structure. Like here you can see we have this one, but even this one, we want to see how it's gonna close. Will it close outside that BOS or inside that BOS, right? Because now when it closes outside, that means that these buyers are strong, and when these buyers are strong, that means that they can even come retest around here next time before they push up. Actually, even myself, I was looking for sales, took sales here with the group, with the free group, but here that time when they failed to close below here, we took this as an inducement, like I always say. That's why and that's why that's why we went out. So right now I can even put this because there's an indicator that I also can use here sometimes, right? So let me put this. You can use it on your advantage if you don't know where your where your trading window is. So we're gonna leave the Tokyo because the Tokyo is for the range. So now if you look at this, guys, this is the New York. Now when you look at the New York opening, which is the 15 minutes, it's okay. Look at the New York opening, so you can see it was easy because this range was the Tokyo range, and the Tokyo range was simply just indicating that this here is an accumulation zone, right? Then they manipulated outside, then distributed outside. Is this push a real push? If this push is a real push, then they should close outside there, right? They should close outside there, because if not, we will be looking for a continuation down below. So yeah, check the DXY. The DXY is still selling. So if the DXY is still selling, I'm looking for a push on the US state, like push up. But by the time the US, like if you look here, these guys, they are about to reverse. The DXY is more likely to reverse, because when you go daily, yeah, when you go daily, we have this big candlestick here, this blue big candlestick. They're more likely to either break past or correct 50% of that candlestick, whereby they can even retrace. Sorry about that. Whereby they can even retrace around here, give us something like this, like a rejection candlestick there. Before they do that, we simply need a confirmation. That's why USDT was buying. Is because when you go 5 minutes, 10 minutes, 15 minutes, lower time frames, when you look at the where the New York was located, you can see that these guys, we have a lower low, lower high, lower low, lower high, lower low, lower high. Obviously, you knew that, okay, now they came here, they failed to take out this leg here. But you know that, okay, since they failed to take out that leg, then this push was supposed to do what? To take out this one. But instead, what they did, they failed, and they gave us a lower high, like I was saying there. After they gave us that lower high, they pushed down. They failed to take out this leg. So every time they fail to take out this leg, remember, they've been in a bearish rally. So since they failed to take out this one, came down, failed to take out this one, they were simply generating liquidity. And now, when you look at the New York opening, London opening was here, and we know that above there's some early sellers. Those early sellers are our inducement. So now, what do you do when you go to 5 minutes? You simply need a point of interest between this leg and this leg. Why those legs? Because if you look at this movement, right? If you look at the movement, this movement is taking place between those legs. And now, since these guys are moving, now when I look left, I can see that the first shift was what? Impulsive. So remember what I said, when price is impulsive, that means there's no need for them to give you deep pullbacks, which means if I take my Fibonacci from that leg to this leg, I should be trading inside 50% and 61.8. Now, when you look inside 50% and 61.8, between there we have a fair value gap, or should I say an imbalance. Now, this imbalance, that time when price came back to that imbalance, remember, they were coming back during the New York. So you can see New York, when New York opens, it opened after they cleaned this inducement, because after this inducement, what we need is to see sellers coming in during the New York opening, and you can see that this here was our New York opening. And when you look at our New York opening was, it's a rejection candlestick. Now this rejection candlestick is good because when you look at that inducement, that time when these guys tap into this point of interest, collect this inducement, they didn't close above that inducement and this imbalance. You can see they were closing below. Look at these candlesticks, they were closing below. Now since they were closing below, after the immediately when the opening, you can see this candlestick was around 25 minutes past 3. You, by the time it's 3:30, that means you know that okay, that's when now the dollar is gonna drop to like here. And remember what I said, for the next push, because now we are trading between this and this, I can take my Fibonacci from here to that one there. 161.8 is here, 23.6 is here. And now when these guys are dropping around, so we started looking at that candlestick on 25 minutes past 3, right? Now when you look at USDT buys, where is 23 past 3? I mean 25 past 3 is here. So when you look at the 25 past 3, if I go to like 1 hour 45 minutes, but let's go, sorry, 1 hour 2 hours, you can see the structure was already bullish. Even during the London session, we were bullish. It's just that the London session failed to close above that break of structure. So now almost half past 3, which is 25 minutes past 3, we saw that okay, we had a manipulation, I mean accumulation manipulation, and now we're about to do what? We're about to distribute price. So someone might think this was a manipulation. Yes, on lower time frames, this was a manipulation. On lower time frames, this is a distribution. But when you go on higher time frames, that's why we say start analyzing on higher time frames. You will see that there was no a break and close above the Tokyo. It was just a candlestick. It was just a wick. Because when you look at this push and this, according to the Tokyo, this was an accumulation. This was the manipulation phase, and those buys around the New York were the distribution, right? So now we can see that we even see the structure for tomorrow. Let me quickly do this, because now you can see we have this bias as our higher low, we have this bias as our current higher low, and this current higher low is the one that was responsible for even taking out this leg on lower time frames, because sub-internally it's a change of character there. But like I was saying, when you go to quarter past 3, we had a last selling candlestick, which is this one. It's a last selling candlestick here. Or even if you didn't use that one, like I was saying, when you look at this here, you can see we had this candlestick here. This candlestick indicates that the buyers are in control there. And when the buyers are in control here, for your confirmation, what you need is this candlestick to close above that demand. Because once this candlestick closes above that demand, now you need 5 minutes for your entry. How you're gonna enter is very simple. Remember, where is 1525? 1525 is here. So remember, immediately 2930 or 1530 or 1529 you buy. Where is 1529? 1530 is here. So the reason why you buy is because, like I always say, once this candlestick close above the range, you can buy immediately, which is here, and put your stop loss 2-3 pips below that candlestick. Or you can let them break. When they come back for that retest, that's when you go in, which is something that I always advise, especially people who trade small accounts. Then from there, then you know that okay, now I'm in, but I don't know where they're gonna print another higher high. That's where you need your Fibonacci from this internal lower high to this sub-internal lower low. Then, like I always say, so that means take profit one was here, and for my second take profit, that's where I'm gonna need my indicator back for sessions, because now I can even hold this until that London high, because above that London high, there is what we call swing liquidity, and they raided that swing liquidity. So maybe someone is not in, someone might not be in. Like myself, I'm not in on this trade because I was in sales, but those sales were poor. So I'm waiting for pure clean market. So now the next stop is to wait for them back in here, because that's when I can start looking for buy opportunities, right? Same goes to Nasdaq. But Nasdaq, you can see we took those sales because, like I was saying, these ones, they came first, they failed to close below. If this current candlestick fails to close below, then I'll be out, man, for real. But let me go to USDT, because like I was saying, I have a 30 USD account and this DXY. So yeah, so this is the retracement. Now let me go here. 3 minutes. Okay, let me go 5 minutes. So 5 minutes. If you look at the 5 minutes current candlesticks, yes, they are bullish, right? But look how they are becoming weak, but they haven't closed below this range, right? And as long as they haven't closed below this range, we consider this market bullish, right? We consider this market bullish. So yeah, just give them time, because now when you look at Nasdaq, let me go 30 minutes. 30 minutes hasn't confirmed yet. I can enter. No, I cannot, because if they don't close below here, they'll push up to here most of the time, right? So which means that if I want to enter them, it won't be a bigger lot, or maybe like risking too much on that trade, right? So let me go to my brokerage. Like you can see, I have like $79, almost 30, almost 80, and I'm trading with it's the first time trading with this. So don't mind the system, right? Don't mind the system. Is for booms and crashes, so I'm not gonna use the systems to confirm this trade. So if I go 1 minute, so I won't go hard on it. 0.01 there. Then I can go 4 hours. So I'm looking for this candlestick to be our sweep, right? So yeah, the next trade I will enter after those confirmations. So for the next confirmations, like I was saying, I can wait for them to close below this range here. Then when they retest, I can enter again here. Right? There's no need for me like to go aggressively. What about my stop loss? My stop loss, I can even decide to risk like $10 or $9 on that move. Since it giving us 10, I mean 11, we cannot risk 10, the $11 to make $9. I mean $11. No, doesn't make sense. So if it's like that, so I can even risk, okay, like maybe 5 per trade. So this one you can see still pushing up, so I cannot go like too much positions in there because of no confirmations yet. So there's no need for me to go hard on those trades. So that this one is USD trade. Nasdaq, like I was saying, Nasdaq has already done this move. So even the way it is, I can place a trade. I can place a trade there. Okay, if this first target like it's $3, that means I can even increase maybe a lot like this 0.05. 0.05 is not bad. It's not bad because 0.05 can give us like $44, risking, can even risk $5 because that means okay, 10 plus that 5, that means my overall stop loss will be like $15. Right, that means my overall stop loss will be $15. But this trade hasn't confirmed yet because remember what I said, these guys, we need to see them closing below there, and as you can see they are pushing, but they haven't closed below, right? Of course on the US data, of course also on the US, so USD JPY will be buying if these guys are selling. Last week, or was it last week, we took risky trade here. Risky trades, I mean when you sell before a closure below, which is this candlestick. When you sell below, this is the candlestick that I always advise people to wait for. So this move took us out. You see, this is the move that took us out, but after that, you see, they melted down. But it's okay because I can go daily or 4 hours and check where they are right now. Okay, right now they are sitting on this breaker block. We are not going to buy until we get a confirmation there, right? But we know that if the dollar index is going to push up, these guys are going to push up also. And if you see, we are sitting on the 61.8 level. If I go 2 hours, okay, 2 hours, because we are looking forward for better refinements. I can refine this to this one. 1 hour is for last refinements. Yeah, so I can even check like 15 minutes or 5 minutes, check 15 minutes. So 15 minutes, yeah, I mean this is a buy, but let's check 5 minutes. Actually, let's check 5 minutes. Yeah, this is a buy. Why am I saying this? Because we got a rejection candles, 2 rejection candlesticks, and this one is engulfing this one. So someone can say, okay, I will wait for them to close above before I buy. That's a confirmation first. So someone might say, okay, as long as I can see that they are trying to push up, I can buy after that confirmation. Then I can go to like 1 hour, because after this, what you'll be expecting after 15 minutes is to see this 1 hour being engulfed, which means that someone can say, okay, instead of 15 minutes and those ones, I can wait for those for the 1 hour or 2 hours. It's just that if you wait for the 15 minutes, it's still okay. That means you'll be early in a trade. You see, so and there's a reason for these guys to give us a retrace. They can give us a retrace because this London lower high represents our internal inducement, right? And beside that, above our internal lower high, we have untapped Tokyo breaker block.